right, so welcome to Game Plan Sunday. Today is August 30, and we're taking a look at the markets, what occurred over the past week, what we noticed coming down the pipeline, and try to use all this information to find our edge in the market and make some money here. So we got the whole crew in the building, so shout out to everybody that showed up tonight. If you didn't show up, again, we will get the email out by tomorrow of the edited version of this video here, so you can check that out. But last week was all about the Fed the Jackson Hole Symposium, excuse me. And let me see if I can go down here. This is right here on our website, by the way. And I'm pretty sure I posted, here we go, right here. So this is what happened last week. And again, this is right from the website. We take a look, we had the unemployment numbers that came out, and they actually look pretty decent here. As you guys can see, unemployment numbers, I posted that they were lower than the previous week's revised down numbers, and that means that that's better than bad news. So we're still down here. If you click that, you can see these are the charts straight from the site. All of this is built into our calendar on the website, of course, so you guys can check these out when the data posts live, okay? So you see 8:30 in the morning. Every week you see that's already here. So and then I do a couple of highlights so you guys can actually interpret what's happening with that. So you can see the chart. The chart is like, right up in here. So it's still like chopping sideways. So, if it's not bad news in this environment, it's good news. Still a lot of people unemployed, but, it's still not trending, off to the downside right now. But again, they keep on revising the numbers, so who knows? But that's so the markets are moving off of that. This right here was the Fed's Jerome Powell speech here. You see what I wrote on here. It says Powell unveiled a new framework of thinking for the central bank that will tolerate inflation moderately above its 2% target. The Fed also committed to reviewing this policy every 5 years. So basically, the Fed's, if you look at the bottom, is saying that the Fed's target for inflation is 2%, and they use the PCE to measure this. But they actually are they're looking to run inflation hotter than that. Now, the interesting thing is that the Feds have not been able to hit this 2% target, okay? If you will, they have this range that they expect to get the inflation over to. So let's say they have this range that they're looking to have inflation up to, and what they view as a healthy level, let's just say this range at the top here is like the 2% that they've been trying to get to. And the economy goes through periods of getting above that level and under that level. So what's significant about this level is that this is what the Feds will use when they determine the interest rates. So when the economy, they view that this is the economy getting too hot. So if it gets above 2%, like right here, they will raise interest rates. They will raise interest rates, and that'll cool the economy off, basically is what they, you're trying to do. But inflation has not been doing that. It's been stuck, down here, and they can't seem to get it above it. Now, there's lots of speculation about the numbers and how they're computing for this information, that it is skewed, it is wrong. They are not counting for inflation properly. Ask anybody to go to your local grocery. A gallon of milk today costs a lot more than it did a year ago or 2 years ago. So, we're witnessing inflation through price increases themselves on these goods. So prices of things are going up. So that the power of your dollar is not basically, you're losing your purchasing power from your dollar. So that's what we mean by the dollar losing its purchasing power. You can't purchase as much as you could 10 years ago, right? But this is because of the Fed's policy. They're printing money and everything. And so anyhow, what they're saying is that they believe now, so they're changing the rules of the game. This is what this is all about, right? This was that meeting was all about. Fed's changing the rules of the game. They're saying instead of targeting 2%, which they haven't been able to hit, right? We're now going to make this target, around 2.5%, right? And so that means that they're planning on juicing the economy up, running it hot. They plan on getting it hot, hotter than they are now, because their numbers is not hitting the numbers. And so they plan on going to 2.5 now, because they believe that, well, if we can try to target this 2.5, level, then maybe we will be able, since it's not coming up as fast as we like, maybe we'll be able to hit that 2% target if we can aim for 2.5%, since aiming at 2% has got us down here to about 1.6. So they're still not seeing inflation. And so they plan on just, hey, let's just make it even hotter. So that means more money printing, right? So that is what happened. That's what happened over the weekend. And so you guys know that when the Feds print money, who benefits from the Feds printing money? Okay. The Feds printing money and the Feds trying to create, well, this is what they do. They create inflation. When the Feds create inflation, there are people that benefit from the inflation. Those are asset owners. And speaking of that, I actually wrote an article this week. I know you guys missed my writings, right? I'm sure you guys missed my writings, but again, this is from the blog site and everything. I actually posted on Facebook, but it was so long. My wife was like, yo, you might as well just make that a blog. And I'm like, I haven't really wanted to write a blog in a while, because I don't think a lot of people have been actually reading them, like I want, we need an audience for it to be worth my time, to be honest, and so in order to get that audience, we need people reading it, liking it, and sharing it, the trick, the algorithms to get those things popping. But everything that I write is always banging, a value. In fact, let me just open this up real quick. So because the article itself is telling you, how to benefit when the Feds are creating inflation. All right. So when the Feds are creating inflation, there are, people that will benefit. Now, to piggyback off of this, there's another article that shows up that says that this is related. Okay. And I wrote this article last year as well. Now, normally when I write these articles, they're pretty much timeless, but you can see it's oldie, right? This is in May, and it was about income inequality, right? And there was somebody who did leave a comment on this. So I definitely appreciate you guys to leave comments on these. Give me some feedback. It's kind of like, when I used to be in the music industry, when we performing at arenas and things like that, I mean, the way that you get a dope performance is if you give the MC feedback, right? Because we feed off that energy. And so that's the reason I haven't written anything in a whole year, because I really haven't had any feedback. So I don't know if it's worth my time to put in the research to, put this type of information out here. But if you guys like it, then, that's your way of giving me feedback. And I have lots to talk about. Mark and me and them, they can tell you, man, we get on the line, I just brain dump on them. So it's probably a little better if I write it for you guys so that you can get it. And instead of you going through a lot of the content that I research, the books and stuff, it's crazy, right? And so my gift in this game is that I break things down and to simplify, versions that regular, everyday, schmegular people, even people in the hood, because that's where I'm from, can understand this stuff. And if people in the hood can understand it, then you guys can understand it. So that's what I do. I break it down to bricks and pounds. So anyway, this is the article that I was talking about, and make sure you guys check it out. It's just basically telling you, what's going on with the Feds and all of that, right? And we play a really cool game here called Build Your Stacks. If you guys want to play another game, let me know. That game will really conceptualize this whole economy, like how everything is working, okay? That game is telling you guys that. And one of the valuable lessons of that game is that the computer wins over 70% of time. And so when we all play this, basically, when we're playing the game, everybody's basically trying to beat the computer, and the computer wins over 70% of the time. Now, the reason why the computer wins 70% of the time, because of this strategy that I'm telling you about in this article here. This is what the computer does. Okay. So anyway, in this article, I'll tell you guys that, asset ownership, if you think about asset ownership as your savings account, because, Americans are not broke right now. We're in a recession, but you're not broke because people are still getting money. They're still getting stimulus checks, whatever, whatever you're getting, you're still getting it. We know that people are getting it. But what are you doing with the money? If you're throwing it in a savings account, I just showed you that Feds plan on juicing the economy more. Inflation is destroying the value of your dollar. Your savings is in dollars, okay? So smart money takes the dollars and convert it into something else that would appreciate or generate interest, so therefore it's not depreciating. So that's the smart thing. Assets are simple, just like stocks, real estate, or what have you. And this is what I talked about in here, right? So the savings account does not inflate or generate interest, but assets like stocks and real estate do. That's the key point of the article, right? And I also went further for you people that are not traders, or if you haven't jumped off the porch yet. You don't have to be a trader like me to participate. This is like one of the most simplest strategies in the whole world, right? And unfortunately, they don't teach you guys this in school, but we play a little game called Build Your Stacks that will teach you guys this. You'll see it in fruition. But anyways, it's basically buying the index, the S&P 500 as an ETF, right? And it's telling you that the ETF is about 350 right now. And this is what the computer does in the game. And this is why the computer wins 70% of the time. So whenever the feds inflate the economy, the stocks blow up. So stocks blow up, real estate blow, everything is blowing up. If you don't own assets, you do not participate in the wealth transfer. So this is why the poor stay poor or gets poorer. This is why the rich continues to get rich. And then the poor is looking at the rich like, hey, man, you're in your big old condo and I'm down here in the tent, you know, like, hey, give me a handout, right? So this is what happens. You know, you're working for dollars and you're not converting that dollar. You're not working that dollars that you're getting. You're putting in a savings account and you're a loser because you're saving money. So when the feds print money, they're punishing savers. You're doing the right thing in life, but you're being punished because you don't understand that you live in a game. So this is what I'm teaching you guys. This is the game. Anyhow, just check this, check this out. I'll tell you here, basically this is what it's all about. Just check it out, so, but that was the article this week. And again, I'm trying not to take up too much of you guys' time. We're going to try to get out here early. I do have a family function to get to, so forgive me if I am a little rushing, but I do have to try to get out of here. But make sure you guys check this article out. It's right here on the website. And so let me just go back to the, if you just expand that, and we'll go back to the news feed. And again, if you haven't registered to the website, go to WallStreetJackboyz.com and make sure that you register to the website. All the values on the website. I am no longer putting value on Facebook. I jump in from time to time to entertain you guys because I know people are stuck on here, but we have a website that does everything that Facebook does. I'm kind of like the black Mark Zuckerberg, if you will, right? Except for, I'm not infringing on your freedom like what Facebook is, right? The Facebook police controlling your speech and all of that, right? But this is a place that's no garbage, is all value. So just keep that in mind. Anyhow, speaking of, family function I got to go to, make sure that you get your Wall Street Jackboyz face mask. You see, we got the face mask popping off. See? Bingo, stylish. I don't know if it blocks viruses out or nothing like that, but what I do know is that it looks pretty fire. So you guys can get that from the App Store, of course. From the store up here on the merch. If you click on the merch, you can actually go get your merch from there. Anyway, I wanted to show you guys this here. Let's see, from there, this Buffett indicator. So I posted this in here so you guys can check this out. The Warren Buffett indicator, it gives investors a snapshot of valuation of the markets as a whole as being undervalued or overvalued. Now, I wanted to point this out because I think that is relevant right now. And you guys can just click on it. You can see this is the Warren Buffett's indicator. This is what he judges, when there's value or when the markets are overvalued. And you can see, when we got right up here, the last great peak was, 2000. This is the dot-com bubble, okay? This is the dot-com bubble. When we peaked over here, this is the Great Recession, all right? This is 2008, okay? This is where we are today. I think it's always great that we know where we are, right? We're always ahead of everybody else in the game. I know a lot of these stock traders, they just be pumping stocks and they talk about this, that, and the third, but I promise you, majority of these stock traders are idiots, and idiots can make money. A pig can make money right now. I just told you the reason why the assets are going up. They don't even understand this, right? It's because the feds are inflating. And so all you got to do is be an owner of assets and you will appreciate, you will make money. So you don't even have to be a genius, okay? But we go over some of these economic indicators and things like the Buffett indicator up here, so we know where we are in life. And this is one reason why Warren Buffett says that, he don't see anything worth buying. And everybody was pissed off with him because he said he don't see nothing worth buying. Well, this thing here, basically the consensus on this indicator is anything under 75. Okay, so you say 75 is about right here. Anything under 75 is undervalued, right? So the time to buy, to book the, to load up the boat is anything under 75, right? Those were the points that you should have been buying at, right? And when this thing gets above 75%, then you're looking into overvalue, right? Now there are critics of the Buffett indicator because we've been seeing that the markets have been going over 100%. So some people use this indicator instead of at 75, they use it at the 100% value. 100%. Anything over 100% is overvalue. And I like the 100% versus 75 because we see how far the market has been going above 75. And so 100 seems like to be the place that makes sense, actually. And so, but I just want to show you guys that before we jump into the charts here real quick, because this is where Warren Buffett, this is what he uses. Okay. And when he say things are overvalued, it means it's time to get out of Dodge, right? Because that correction, bingo, you see that? That correction go down, it's a wrap. And it's hard to know the timing. We don't know the timing because we're dealing with, rationality of humans, which humans are irrational. So, there's no way for you to predict human activity. Okay. We'll touch back up on that here real quick. Also, another thing I wanted to show you guys was this emerging market ETF. We'll talk about it. I'll show you guys here in a second. I think it's a good time to start to actually focus on getting some exposure outside of the U.S. market. So if you want some exposure outside of the U.S. market, here's an ETF that I keep on my chart. It's called the EEM for emerging market. Let's just take a look at the top 10 holdings here. And then we'll get into the charts after I show you guys this. But these are just the top 10. There's a whole lot more in here. But if you want exposure in Alibaba, okay, Tencent, right? Taiwan Semiconductor, Samsung, here we go. I'm a Samsung user. You guys know I use Samsung products, right? Got the TVs, phones, and all of that. You can't buy Samsung in our market. So, but if you get this ETF, you can get exposure there, right? Meishuan, Naspers, Reliance. One of my neighbors, he's from India. He was telling me about this company, Reliance. He was saying how they are like the Amazon of India. I never even heard of it, right? But that's why it's good to get out and communicate with different people. And he was like, this Reliance company, they do everything. They take over everything in India. And, when I was looking at this ETF, I was like, oh, they do have exposure in this company he was telling me about. So that's awesome. So I don't have to buy that stock individually, which you can't. But you don't have to. If you buy this ETF, then you're in the game. JD.com, right? And China Construction Bank Corporation. So you got all these top 10 holdings outside of the American markets, which, China is blowing up. So just keep that in mind. All right. All right. Bingo. So, all right. And again, I can't stress it enough. Make sure you guys check out the website, WallStreetJackboyz.com. In fact, I'm going to take you guys to the homepage because I want to show you something. I am working on this day in and day out. So there's a lot of things that are different from what you guys have seen in just the past week. Okay. Lots of things have changed. Even this homepage has changed. One of the things I wanted to just point it out to you guys is that no longer on the homepage will you see the live chat button. So there is no live chat button on the home screen anymore. You will have to log into the site and then you have to go back to where we just were at or your dashboard in order for you to access the live chat room, which you'll see the bubble down here, and it's free. Okay, so you guys don't know the chat is free. Again, everybody else in the industry are charging $200 to $300 per month for their chat room. So can't stress it enough. Make sure you actually take advantage of that. Okay. So anyhow, with that being said, let's take a look at the markets. We were just talking about the NASDAQ. I was showing you guys the NASDAQ. Let me see how much time I got. Okay. All right. Let me try to breeze through this real quick. I'm going to go through. Let's go through the NASDAQ composite. I just want to show you guys this real quick. We're going to go on. All right. 20 year. Actually, we're going to go beyond 20 years here. Let's see. All right. So this is where we are right now. We're going to switch to yellow. And the price. So the way we track the way we read the charts, here I have a custom indicator, this moving average line, right? So when we talk about the mean, that's what we're talking about. The mean, we talk about reversion to the mean. As you see, price normally stays around the mean. It'll come, it touches, it may breach, but it comes back and never goes too far. It stays right there close to it. It always come back to its mean. It may breach it, okay, and it come back, but it pretty much stays close to the mean. And you see how wide it got, like right here in this section here, the further it got away from the mean, the bigger that drop was. It ended up, breaching all the way down to the 50 moving average, right? All the way down here. Okay, so I want to show you that because I want you to see where we are. Price is way above the mean. Now we see in the past, price stays close to the mean. So when it gets too far, it corrects. All right, so I don't actually know if it's going to correct, but according to what we can see, how this thing behaves, it is time for a correction. I don't know if that's going to be this week or not, but the evaluations are too high, and it's all in the tech. Okay, you remember we talk about the dot-com bubble? That was all the tech stocks that blew up. Okay, right now, what's driving the markets? The tech stocks are driving the markets. So we're seeing all this energy blowing up in the tech stocks, and the evaluations are astronomical. They're way out of here. But so what I want to do is actually let me take you back a little further in time, and let's examine that. Okay, bingo. There you go. So if you take a look at this, this is 2000. It looks pretty similar, right? We just talked about, price above the mean. Look how far it is from the mean. Okay. Now it snapped. Okay. That was a hard snap. That was the bursting of the bubble. And what followed was, destruction of capital, pure destruction of capital. Okay. And if we take a look at where we are today, it looks pretty similar. I mean, this chart is damn near parabolic. Okay. If I squint it in, you'll see what I'm saying. Watch this. Look at that. Do you see what I'm talking about? Look at this. When it went parabolic, look up, got wrecked. Look at this. Look at this. All right. So that's what normally happens. I just want to show you guys that, because I think that we have to be a little careful at this point. It's a lot of speculation that's in the game. And this is a tricky time, unlike any other time, because the Fed is feeding the bubble. And this is common saying on Wall Street to don't bet against the Fed, to ride the wave of the Fed. So anyway, I took this high. Let me see. I took this high right here to this little low when the price came back, snapped back to its mean. And I just want to do a little comparison here so you can see. This is what 28% drop. So what I'm going to do, I'm just going to duplicate this drawing, and then we're going to just stretch it. And I just want to measure where we are, currently in comparison to this, just to get a little, a comparison here. All right. And again, I can't stress it enough. Make sure you guys hit that notification bell. If you're on the YouTube side, come over to the website, WallStreetJackboyz.com, and subscribe. Registration is free. Okay. The training is not, but you can, do things on the website, learn, and get a lot of value for free. So anyhow, check this out. This is where we are right now. Okay. So this is this peak from the dot-com bubble. Look how far beyond we have blown through this. Let me just put it to the side a little more. Look at that. Even the price of the NASDAQ is higher. You see this is where the price of the NASDAQ is. So I need to extend this even, because it's worse than the dot-com bubble, basically. You see, this is the type of bubble that we're dealing with right now. So check this out. I got to stretch this out like this. Okay. Just what it I just want you guys to see how big this bubble is. So the bigger the bubbles we saw, the harder these bubbles pop. So what you guys saw, what we all saw back in March, is nothing compared to what is going to happen when this bubble here explode again. So they just basically what they've been able to do is to pump up the bubble. And so now that the markets are above its highs from the previous highs, which were in March, okay, back in this time frame, here was the bear market. And so it's on record now as the shortest bear market ever in history, which you already know we still have over 20 million people that's out of work right now. And the only people that's benefiting from the Feds trying to fix things, they're trying to come in and solve things, is that they're growing the wealth gap. And this is the reason why you have the wealth gap. If you don't own these assets, then you're not participating. All right, so just want to show you guys that. And something that's key important this week is that we have Apple and we have Tesla with their stock splits. And so let's take a look at Apple real quick. And Apple stock split, this is interesting because when I first bought Apple, I bought Apple at $91 a share. And that was way back, I have to go back weekly. I don't even have enough space, but this was years ago. And so it's funny because now that they, changed the price of this, it's like, oh, this is hard for me to even go find it because they changed the price and the price is like $128 now, right? So anyhow, so that was probably maybe 4 years ago when I had got into Apple at that time. I am no longer holding my shares of Apple. I got out with over 238% profit off of it. It was a good deal for me. But Apple is actually you see is going parabolic again here. And the stock split, the whole scheme of the stock split is to attract new money because the prices of the stocks are just way too high. So it's the scheme. This is what everybody's just been plotting on. People call and say, hey, what should I do about the stock split? Should I get in before? Should I get in afterwards? I mean, it really doesn't matter, right? And so what I believe is that, if you want to be an owner of Apple, I believe that you'll get better prices of Apple in the future. And so, don't get caught up into the hype. And now this thing can continue to go more parabolic and it will be ridiculous, but nothing amazes me right now because of the Fed's interference in the markets. We're looking at very distorted markets where you have bonds, which is the place of safety that they can't get any interest in. And a lot of these guys don't understand gold and silver. And so they need a place to park money and they're parking it in stocks. So they're taking on risk because there's nowhere else to get any yield, right? So the bond market is just, basically hijacked from the Feds. But anyway, you take a look at the price of Apple. It is, overextended. And tomorrow, I believe, is going to be very volatile, with Apple and Tesla. So you have Apple here, and then you have Tesla. And as you can see, Tesla was at like $2,500 just a day ago. About a day ago. But anyway, now you see the price is down to $442, right? And so, the scheme is that, okay, well, you can get this great stock for a lower price. And that's why they do the stock splits, because they're looking to attract new money in because they have a smaller price. And those people who already own the stock itself, when it's split, you just get more shares. So the price itself drops down, which if you didn't get more shares, then you would be losing value on your investment. But they just multiply the shares. So now you have more shares, right? So in Tesla, you got 5 more shares, per one share that you had before. Apple, you got 4 more shares to the one. So I just want to explain it to you guys. That's what's happening there. Either way, if you want to get involved in those companies, I mean, it didn't matter if he was in there before or afterwards. I suggest people to get in afterwards because this pump up was for the speculation. All of this was just pure speculation, hype building, kind of like what people do with pump and dump stocks, build the news up and, you're dealing with humans, crazy, irrational thoughts here. So that's what's happening in that. I talked earlier about the emerging market. So let me actually show you guys this real quick. And the emerging market, if you see that the price of this thing is actually not bad in comparison to the highs. And so we'd say, back here from the highs, and it's finally, broke above its, 200 moving average. And it's coming up to this close to this high here, but it's still got a lot of space to go, right? So we got this target here. And I just think that this is a good buy. This is taking a look at it on a weekly chart, but let's take a look at the daily chart. And, we're seeing the momentum is in here. The trend is, come on here, get it right. All right, there we go. So we got the trend that's coming up here, and we got a pro squeeze that's in here. So we got some compression. This is compression in here. It's been trading choppy. It's been trading, choppily upwards. But, lo and behold, it's been going upwards, right? So, and again, this is those stocks I was showing you guys before. But I think that, we have a lot of money that's invested into the foreign markets because of, the outlook of the future with China, mainly China, and then India, stuff like that. But basically, American companies, nobody's seeing that they're going to be able to produce, a high level of productivity with the economic shock that we're going through right now. A lot of people are out of work right now. They're trying to do things online. We're just looking at the destruction of capital, really. So anyway, I just think that's interesting. And then I want to shift over to gold real quick. All right, so let's give it like 10 more minutes and I'm done. I'm done. Okay. Try not to talk you guys' heads off today. All right. So I think that gold is in an interesting position. We was talking about this in the chat room on the website that, gold is in another buy position. And, what we were basically looking at was this 50 moving average right here to see if the stock, price will stay above that. And you got that, right? It came to the 618 and it came back down, didn't quite hit the 50, didn't quite hit the 50. And then you start to see it leap up, from the Fed's, meeting at the Jackson Hole Symposium, and that they plan on running the economy hot, and the protection for inflation is gold, right? Gold and silver is protection from inflation. So the gold market's got a bit. We saw here in this consolidation period, the momentum on the squeeze is showing us that okay, it's a lot of selling here, but when it turned yellow, that's indication of reversal. So you have a reversal even on the stochastics here. Price reverse, the momentum is reversing, and then we have a buy trigger in here. And so, I am looking forward to another rally here in gold. And I think that, right now is a great, time to get back into gold. They shook out a lot of the antsy guys who was ready to get their money back because they was holding on for years and they probably didn't make any. They finally got there and they sold off here. But the strong is still in. So the strong is still in long term for gold. The economy is still not right. The stock market is bubble, but the economy is still effed up. So that's why gold is still in play. So a couple names. Let's see. GOLD, don't like that. Let me see GLD. All right, here we go. So GLD, I do like GLD. And we blew through all these levels here. We just take this swing high to this low. Oh, let me get that right. All right, bingo. And there you go. You have the same little pattern there. You can play, names like GLD and let's see, KL. KL is another name that I like to play on gold. GDX, the junior miners, same thing here. So we could take these levels off if we belong through these levels. DRD, Dustin says, DRD, let's just pull it up real quick. My man Dustin in the building. Dustin been calling out some hot plays in the group, so make sure you guys check out the chat room because it's not just about me, it's about the team effort. We got eyes all over the bread, so everybody's participating. I encourage you to come and participate with us. This right here looks great, Dustin. Dustin called us out here. I like this one, actually. It's got a squeeze on it. We got the trend flowing upwards. We got the squeeze popping here, right? We got the stochastics going up, right? We had a buy trigger right up in here. We got some earnings coming up. Pretty sure this thing is going to pop. So I like that as well. Also, silver, is doing this thing as well. So take a look at silver here. And yes, silver is looking outstanding, to be honest here. So silver is definitely looking outstanding, much cheaper than gold. It's got a squeeze on this thing. As you can see the squeeze right there, same, momentum shifting upwards. And so bingo, once we blow through this 28 target, then, should be headed towards the $32 target, somewhere around there. All right. Yeah, so you guys can play, again, on the silver stocks. If you're playing the silver stocks, again, I encourage you to get some physical silver and some physical gold. I mean, you can get this stuff for pretty cheap. I mean, you can get a gram of gold for like $100 right now. I mean, so no matter your level of wealth, you can still participate in this. You don't have to trade and stuff. This is a simple buy and hold strategy, especially on silver. When we call silver out, it was right here. My call, this was my call right here. I made a video about it, posted and everything. So this is just a buy and hold. Look at where you've made all this money, right? 146% right there. Like that's crazy. So this is just a buy and hold. You don't have to be a trader like me, right? This is just what the article that I wrote told you guys: convert that cash out of savings, because cash is trash right now, and put it into something that's going to appreciate. So you basically use silver like your savings account. Like that's what I do. I use it like a savings account. So money that I will otherwise put into a bank, I put that into silver or gold, right? So anyway, just think about it like that. But you got a couple of names like SILV. right? So you got like names like SILV, looking like a double bottom setup in here. Came up to the 618, bounced right off the bottom. Looked like it's going to come back up again. This is a classic play, a double bottom setup. So you see names like that that you can play silver in. See SIL, the same setup. You can see the print is evident across the entire market. That same print. This is what I mean by print. It's the same setup and all of these things. It looks the same. So you can play those. You can also do WPM. All right. So those are the names that I see on that side. And since I'm so limited on time, I'm going to take a couple of names from you guys right now. And then we'll bring the session to a close. What you guys got for me? I got someone on the Facebook side, my man Baby Zay. Let me holler at him real quick. He says, check this Marvell Tech. All right. So this is another interesting one. It's been a little minute since I tracked this. Bingo. Looks like they just had an earnings and they beat their earnings. So positive news on that. The stock is moving along with its earnings. Sometimes we see stocks can beat earnings and they still fall apart, but this is still looking pretty good actually. Trend is up. Again, this is actually looking bullish. You got a target at about $42. You can round it up to about $41.27 right here at the extension. Let's say about $42. So I do like that. Baby Zay 22 on the YouTube side. I hope that answers your question. Who else we have? DIN. DIN. This is the one you want right here, Dustin? Who is that? Is that Terry? Excuse me, Terry. This is the one you're looking at, Terry, the Dine Equity? Okay. So Dine Equity, again, this stock right here, let's just take a look at it. This is like a counter trend stock right here. The trend itself is, you can just track that 200 moving average and see where it's at right there. So it fell right here at the bottom. It's found this floor. And so it's trading upwards within its range, but it got rejected last time right here at that 200 moving average again. So boom, it's got rejected, come back down. It's making another run for it. This time it's poking its head above this target. So this one here is interesting because it is in an overbought territory, but we need to see the price clear. And so I think that you'll get more clarity on this stock in particular this week, actually, because one way or another, it's going to actually reveal to us if it can, breach this level. It's poking its head out, but we want to see price clear, right? And then normally what happens is price could clear and then price could fall back down. So this ceiling here then becomes the floor of the move higher. So that's the way that I view that. So sometimes we see that the markets trip people up when you get that poke above and then you get dropped back on your head as resistance. So that's why we like to see the price clear that resistance overhead. But yeah, that's what I feel about that. Yeah, it's got to break those moving averages. John. My man John has been on fire, yo, man. Shout out to my man. Yo, John is shout out to my man John. I got to give my man a salute. He in the chat every day, all day with the plays, okay? So, I mean, it's not just me. Whole gang is up in there. Mark is up in there, Dustin up in there, Justin's up in there. Justin holding it down even on the Forex side. So if y'all don't know, I'll show y'all the groups. So we got the Forex side popping now, everything. I mean, the website, the way that I built it is everybody can get their shine on. My man Ron B has been in there. He's been wrecking-ish. So make sure y'all check that out. So John, let's see what John got cooking. DR Horton. Okay. So yeah, DR Horton is getting a nice pullback up here. It's right here at the 20. And so you see, price rallied up pretty good. And now you're just getting a nice healthy pullback on here, which this is not bad. But it is getting a nice pullback in here. So basically what you want to see is the price can hold this 20 moving average, or will we continue to fall at the 50 moving average? The way it looks is that it's going to continue to fall. The way I'm looking at the shift in here, I don't have a sell trigger necessarily, but if it breaks that, snaps this 21, that's going to be a sell trigger, right? So to me, that high right there, that rejection, and it's at support. If it breaches support, then, for me, that's a short. All right, cool. Yeah, I mean, the housing market has been doing pretty good. The Fed's able to suck people into this market, buying homes. So that's interesting. I don't have time to even get into that this week because I know we're short on time. But the more I learn, the more I earn, the more I teach you guys what we got popping. And so that's what it do, man. That's what it do. But yeah, make sure you guys check it out right here on the website. Let's see, Ron, he already done posted an update. American Air cuts October capacity 55% after dropping 15 cities. See, this is what I'm talking about, the economic pain. The economic pain is not over. So it's all about confidence, and the only confidence that's moving the markets is the stock market. So that's why it's important that people get involved in the stock market, but I can't force you to do so. So one last thing we'll take a look at so you guys know what's coming down the pipeline. On the news feed here on the website, you can see we also, let me just push that back. Bingo. All right, so we can get more screen. You guys can see upcoming events right here. And I'm pretty sure you guys like this this feature here, but you can see what's coming up. September 1st, we got the ISM manufacturing numbers. We got the ADP numbers on September 2nd. We got the unemployment weekly claims on September 3rd. We got the servicing ISM numbers. We got a little more. So when you want to see a little more, all you have to do is go to the events right here. You can just expand this again, hit events, and you'll go straight to the calendar itself. Justin hit me up. He said, "Hey man, I really like the calendar. I like how you can export it." So he actually export the data that I put into the calendar, and then go straight to your phone, so you can get the notifications right on your own phone actually. So again, it takes work for me to actually put all this together. But as you guys can see, here's the calendar, so you can get a look ahead of time, so you know what's happening ahead of time. And also, I give descriptions of the data that is being presented in the news, so therefore you're not totally lost. I don't know any other stock trading company, groups that do this, but I don't want you guys to be lost. I want everybody to be very knowledgeable. And so this helps you guys to understand what is being presented. So when they're talking about these economic data numbers, you know what's going on. So yeah, and then we got employment situation on Friday. Okay, so the employment situation on Friday is going to be big news there. Remember, Monday, markets are going to be closed. As you guys can see right here, markets are going to be closed due to the Labor Day observation. So that's going to be next week. So anyway, I'd like to look at the monthly calendar, the view. You can go back in time to see what came out last week. Like we came out with the Consumer Confidence Index. I didn't show you guys at this time, but it's on the news feed. So you can go back and take a look at that. Well, I highlighted what was happening with that, which was negative news, actually. It was saying consumer confidence was down. But anyhow, you guys can see what's coming up the pipeline here. And all you got to do is hover your little mouse over there to get a little preview. Okay. So I hope you guys like that. Anyone who doesn't know the pain of tracking these events, exactly. Yeah, you better make sure you stay on top of these events because they have an impact on the markets. And if anybody else had anything else that you want to take a look at, or you see any plays, you can drop them right in the chat room right here. So these are the chats. We have individual chats, we got video calling, and all of that, right? So there's the chat room right up in here, so you guys can actually get involved in the chat room. You can actually just open a whole new tab if you wanted to make it bigger, smaller, what have you. This is all in here. All right. So with that being said, man, we're going to bring this session to a close. I appreciate you guys showing up, and we'll catch up like how we always do until further notice. You guys have a great week in the markets. Peace.